Hello everyone. I'm Saket Mehra, partner with the risk practice at Thornton, Bharat. I welcome you to our knowledge podcast on related party transactions, a very important aspect from a corporate governance standpoint. I also have the privilege of having with me my fellow colleague Fatema Hunaid, who is a chartered accountant and a related party transactions governance expert based out of our Bangalore office. Welcome, Fatema.
Thank you, Saket, and I really look forward to our engaging discussion on the related party transaction governance topic, which is of utmost importance and a priority area on most boards of public companies and even large private companies these days.
Great, Fatima. So, Fatima, let me start with something around corporate governance, and you have been very actively working with so many companies, advising them to improve their governance structures, looking at the related party transactions. What's really surprising is that over the last couple of months, there has been a spurt of activities around shareholder activism. There have been instances wherein a lot of proposed transactions have been blocked. I would say blocked because the minority stakeholders have actually raised concerns on these proposed transactions which the companies wanted to have with the related parties. So there's a lot of shareholder activism that we are seeing in the corporate governance in the corporate world. What's in your view, Fatma? Wanted to hear from you as an expert that what is the kind of framework that currently exists for India Inc. How effectively is the framework really working, for India Inc. and what more can be done around it?
Thanks, Saket, for the question. I think when we talk about governance in related party transaction, I think the meaning is still the same. Any governance needs to cover the entire life cycle of the subject matter. Similarly, in the context of related party transactions as well, if I were to dissect the whole life cycle of related party transactions, we could look at it as 8 stages. Starting from identification of related party transaction, the pricing of these transactions, the documentation underlying the transaction, what is the approval mechanism around it, then the actual execution of transaction. And then if an external party is involved in validating, that's another additional stage. And an add-on would be if there's an opportunity to automate various aspects of this life cycle, then that's the 8th stage, I would say, of the related party transaction framework. Any framework that covers all of these aspects, I would say, is a holistic framework and sets up the company for success. And as far as governance is concerned, Saket, it's all the same. There are 4 fundamental pillars of accountability, responsibility, fairness, and transparency. So if these 4 pillars the framework speaks to, then that to my mind would be a holistic related party transaction governance framework.
So thanks, Fatima. When you talk about the framework, and you rightly put it in terms of the key components of this framework around transparency, around accountability, etc. What in your view really differs between a listed organization or a listed company vis-a-vis an unlisted company when it comes to related party transactions? I mean, how do you see the transactions or the environment really being different in these 2 set of companies with respect to RPTs?
Sure, Saket. There is a fundamental difference. The most important being public companies, listed companies are regulated by SEBI and by Companies Act. And specifically, SEBI is very stringent. The LODR regulations are very stringent. And every related party transaction needs to undergo an audit committee approval, right? So that shows the difference in the stringency in the approval framework. In terms of documentation and other aspects around the RPT life cycle that I referred to earlier, again, private companies, they do have justification for the transaction, but it's not so robust and they don't really see it as a very important aspect, especially when it's not an international transaction. That's when the income tax regulations and the indirect tax regulations become applicable. But just for a corporate governance point of view, smaller private companies are not very into having a robust framework or a governance framework on related party transactions, whereas for listed companies, it's different.
Okay, okay. But Fatema, when we look at the framework and in your experience, what's been the really challenge for the companies to adopt this kind of a framework? Forget whether it's a listed company or it's an unlisted company. Because the provisions largely remain the same from a Companies Act standpoint. It's only, as you rightly put it, for a listed company, there are additional requirements from a LODR perspective. But when it comes to core implementation, when it comes to core exercise of this kind of a framework, what challenges have you faced? I mean, have you experienced as to why the companies have not been so successfully implemented it? Why there is a lot of controversies, or I would say corporate controversies, which have emerged these days with respect to related party transactions?
I think that goes to the basic root of the ethics of the company, the value and culture of the company that defines the success of any governance framework. The other is, now again you pointed out the difference between public and private. In private, the companies are usually closely held, right? Now there is not much of a difference between the shareholder and the material stakeholders are the shareholders, the people who are running the business themselves. So it's not like it's going to impact a third category of shareholders if the related party transactions were to go wrong. But in the case of public companies, the shareholders are different from the management that is running the company. And therefore, there's a difference in interests, which is why the governance there in public companies is far more important, and not having it in place can have significant impact on the stakeholder interests, and thereby potentially undermining, as per the examples you've quoted earlier as well. And coming to the point as to what are the difficulties companies face practically, there are a number of challenges, and I think one of the most important issues which undermines the governance operating effectively is management's just focusing on the compliance aspect. If they were to look at the whole life cycle holistically, in having the right approval mechanisms in place, in having the right robust documentation in place, and these processes kicking in at the right time, can go a long way in ensuring the parties are identified, transactions are identified, and there is enough time in hand for the stakeholders to actually approve it and not just do it out of force or paucity of time.
Yeah. So you're saying it's more about the intent with which the companies typically would carry out these transactions, the amount of disclosures the companies would intend to make to the relevant stakeholders, the timeliness of the disclosures, the availability of the information, the adequacy of the documentation, which really plays a significant role. So that brings me to another question, Fatema, a related one. From an expert's point of view, when you look at the documentation, when you look at the extent of documentation which is being maintained by the companies, how do you define a kind of a benchmark that what is really a good set of documentation and not what is so good documentation?
Sure. Saket, this is fundamental, and thanks for asking this question. When you ask me about my experience, I think this is one area in corporate governance of related party transactions that has the biggest opportunity for improvement.
Okay.
Typically, I have seen managements relying on certification or just putting together some benchmarking in place, either internally or with the help of internal consultants. What's sufficient, appropriate documentation? I would like to rely on the OECD guidelines, the Organization for Economic Cooperation and Development, international guidelines. Although they are prescribed for transfer pricing, I think they hold a lot of value when you talk about any intercompany transactions. Now, what are the fundamental principles of that prescribed by the OECD? One is the documentation should be sufficient and appropriate. Sufficient, depending on the nature and complexity of the transaction, and appropriate, it needs to be relevant, timely, and contemporaneous. And fundamental to this whole thing is describing in adequate detail the roles and responsibilities of the transacting parties. What are they trying to achieve? What are the risks both parties are assuming in that transaction? And what are the assets being used by both the parties in the transaction? Putting all of this together, along with benchmarking in sufficient detail. And again, when you come to benchmarking, Saket, internal benchmarking is of utmost importance, because external is fraught with a number of non-comparable aspects. Very rarely do you find closely comparable transactions that don't impact the pricing. Even if you find, there are a lot of differences that impact the pricing comparison and ultimately render that benchmark useless. And finally, I would, as a governance specialist, place a lot of importance on business and economic circumstances surrounding the transaction.
Okay.
I would not really be bound by standard statistical measures of average or median or in the quartile range. Companies Act or SEBI does not prescribe any of these. I would place a lot of importance on the circumstances surrounding the transaction. For example, during the COVID year, there were fundamental changes to business environments, and you could not hope to get internal or external benchmarks. So you documented the reality.
Right.
So all this constitutes good documentation, and I think there's a lot of area for improvement there.
Okay. So, and you also touched upon something like roles and responsibilities, Fatima, some time back, about the roles and responsibilities of the stakeholders. I mean, of the people who are, I would say, the custodians of those transactions, the KMPs, the people who are actually undertaking those transactions in the companies. How do you make sure that, yes, those roles and responsibilities are adequately communicated, are adequately understood by those different stakeholders? Because increasingly, these are the people who are the ones to be managing the transactions, I would say, and who are the ones who are responsible to prepare adequate amount of documentation. So what's really happening around increasing their awareness around the roles and responsibilities, Fatima?
So Saket, in my experience, I see that all the stakeholders, so it starts from the management, the board of directors, the audit committee, the auditors, and then the external consultants. So these, I would say, are more or less the key players or the key upholders of governance in related party transactions. And what I see is more or less all these stakeholders are aware about their roles and responsibilities. It's pretty clear to them, and they're quite alert when it comes to approving related party transactions. I believe a certain more level of depth is required and rigor is required in terms of, like I said, timeliness of approvals, adequacy of documentation, and engaging externally with stakeholders. And I believe companies can benefit a lot from engaging with external consultants on this aspect as well.
Okay. And so staying on to the related point of documentation, Fatima, we spoke about the roles, we spoke about the adequacy of the documentation, we spoke about what typically these stakeholders need to be doing with the external service providers vis-a-vis the internal stakeholders. But increasingly, I mean, we've also seen technology playing a very significant role in the entire value chain of an organization. So when it comes to documentation, again, technology plays a very significant role, because the archival of the documentation, the retention of the documentation, making sure that yes, there is adequate trail which is maintained, because again, under the Companies Act, you need to be preserving these documents for a good number of years. So what, in your experience, how technology has evolved, how technology has helped companies to comply the documentation bit of it when managing these related party transactions?
Right. So Saket, I'd like to answer this question on the relevance of technology across the entire life cycle of related party transactions.
Sure.
Not just on documentation. So I believe technology is that single most important factor which will help companies drive real-time governance rather than post-facto. To my mind, doing anything post-facto can add very little value to no value. It's just ticking the box.
Okay.
So talking about use of technology, first straight up advantage is it will add a lot of efficiency. It has the potential of triggering real-time approvals with the right defined stakeholders or the approvers in the system.
Sure.
Third advantage can be covering the testing of related party transactions can be done 100% with the use of technology.
Sure.
The other advantage is that archiving of documentation on a single platform. You have a variety of transactions, you can just upload the documentation, you can upload whatever proofs you have in terms of pricing, benchmarking, and there you have, at the click of a button, you can get for whatever authorities. Again, a great opportunity to consolidate related party disclosures that a company does across different regulations like income tax, Companies Act, SEBI. All of that can be consolidated onto a single platform. And finally, you can have a dashboard that shows up your regular, where you are on the approval process, how many are pending approval, how many approve, and a whole host of other MIs can be available on your related party transaction dashboard. This is just a sample of what technology can achieve, and I believe there's a lot of potential here as well.
Great. Just one last thing, Fatima, which is more about these changes or the amendments which keep on happening. I think the whole objective and the idea of making these regulatory changes, be it on account of Companies Act or on account of LODR requirements, is to increase the disclosure, increase the transparency as far as the governance is concerned. What's been your view as to what else can be done, how it can be enhanced further? Recently, we saw some changes which took place. Are those adequate enough? Is there something more which needs to be done? So you have a view from you around those regulatory standpoint.
I would say, Saket, management will do well and boards will do well not to adopt a prescriptive approach. And by that, what I mean is a rule-based approach. Because you can't have a rule for everything. As long as the governance ideology of the company is right, it's rooted in the values and culture of the company, and in a company which places ethics right on top, it will most definitely achieve the governance objectives even in the related party transaction. Because related party transaction is only a subset of the overall governance at the company. So this is what I truly believe in.
Sure. But you believe that the recent changes, the recent amendments are adequate enough to create that amount of disclosure, that amount of transparency, or is there something more which is required to be done? Or maybe something as an international practice which you believe should be replicated in the Indian context as well?
Well, I would say these are all steps in the right direction, and a number of them are inspired from real life incidents which have come to light.
Sure.
Especially one which is very interesting and places a lot of onus on the management to say that you need to identify all related parties where there is any direct or indirect connection. Now, gone are the thresholds of shareholding or significant interest, etc. Right. This is completely opening the floodgates. A lot of onus placed there, and I think that is going to be definitive. Now, it will be very interesting to see what steps the managements of companies take in order to discharge this new obligation that has been placed on them.
Right. So I think you have a point, Fatima, because when you say it's not only about the regulations, it's more to do with the intent or the so-called tone at the top, which really matters in terms of what's the intent with which an organization or a company is entering into these transactions. What is the extent of disclosure or the transparency that they need to bring in is what determines the intent of the management. So I think that's well covered, Fatima. I think really useful insights from an overall perspective, be it with respect to the regulatory aspects, be it with respect to the documentation aspects, the benchmarking which you talked about, More importantly, I would say the roles and responsibilities which the different stakeholders need to play within the organization as well as outside the organization. How technology is playing such a significant role, not only in managing the documentation, but also in terms of enhancing the availability of information for the people to be making those decisions. That's really insightful, Fatima. But just if I could do quick, if I could ask you a quick question, what is good governance? How do you define good governance?
Governance which is rooted in the values and culture of the company and not baseline to minimum governance is good governance.
Okay. And how do you define, or what in your view would be the future of these related party transactions?
More transparency, more disclosure.
Excellent. And your piece of advice to the company's management when they are stuck up in a related party transaction, when they are not clear about whether a transaction falls into RPT or not, how would you advise them?
When in doubt, disclose.
Thank you, Fatima. I think we really had excellent viewpoints covering the related party transactions. And thank you very much again for your valuable insights.
Thank you, Saket. It's been a pleasure engaging with you this afternoon on this topic, which is very
Thank you, Fatima. Thank you.